Over the weekend, the U.S. joined Israel in striking Iran, raising alarms over a potential Strait of Hormuz closure. I'm Johanna Bota, and joining me today to take a closer look at how this is shaking up fertilizer markets worldwide is StoneX's Vice President of Fertilizer, Josh Linville. Welcome back, Josh. Thank you so much for joining us again. A lot has happened since we last spoke. Can you walk us through the fertilizer market's reaction since June 22nd, when Operation Midnight Hammer took place? That's what the operation is called, and where things stand regarding the possible closure of the Strait of Hormuz?
Yeah, so much for a weekend, right? Israel struck Iran. Iran, of course, retaliates. The U.S. gets into the middle of it, and this thing spiraled out of control very, very quickly. And, of course, we're always watching the humanitarian situation, always worried about the actual people. It's politicians that make these decisions, it's people that suffer on both sides of the line.
Hmm.
But as we do, we've got to set that part of it aside and look at what the fertilizer impact is of these strikes. And unfortunately, when you look at the Middle East and you look at North Africa, that region of the world accounts for about a little bit over 50% of the global urea exports. And rightfully so, we have seen Iranian production shut off. They shut down their gas fields as a precautionary measure. That means their nitrogen production goes offline. Israel did the same to their gas fields. Now, they're not a nitrogen manufacturer, but Egypt relies a lot on them. They're the fourth largest exporter in the world. They had to shut down their production. So we lost numbers 3 and 4 for global exporters very quickly because of these strikes. Um, as a result, unsurprisingly, values skyrocketed. We saw global urea prices up anywhere from 20 to almost 40% in a matter of days. And that really looked like it was going to get worse as Iran started to threaten closing the Strait of Hormuz. Now, that's a move that's very easy to say, very difficult to put into progress. But again, it shook the fertilizer market down to its core. Fortunately, and something we haven't talked about overnight is now with the ceasefire talks, prices are down. We've seen Brazil down $100 a ton from yesterday's settlements already on this morning's trade. So fertilizer markets are all over the place in the nitrogen sector here over the last several days.
So, with all this uncertainty, the urea-corn ratio has climbed to record levels for this time of year. Can you break down the numbers for us?
Yeah, this is something the farmers are screaming about right now. Of course, the entire situation in the Middle East causing global urea prices to go up. And this is one of those situations that does not matter where you farm in the world. This is absolutely affecting your nitrogen values. So values have been going up. Now, of course, one of the things we track very closely is that NOLA, New Orleans, Louisiana urea price. It got to a high of $455 a ton. Bear in mind, not much, I think around 2 weeks ago. 345 was the low that we had hit, so it was up substantially. But the thing everybody's yelling about is nitrogen prices are going sky high. My grain prices are actually going down. And for today going on, we are comparing our nitrogen prices against the December 26 corn price. You look at that value, which closed yesterday at 462, that created a ratio of 98. For this time of year, we've seen higher ratios, but it's been in other parts of the year. For this time of year, we have never seen it that high. So that means the farmer, for this point in the month of June, is paying more bushels that he's worked his butt off to, raise and earn and put in the bins. He's spending more of those to pay for his nitrogen.
So, you mentioned earlier the ceasefire, and obviously, we all woke up this morning to the news that a ceasefire between Israel and Iran is now in place. Do you think then we are likely to see a meaningful correction in urea prices, or are the risks to supply chains, like potential disruptions through the Strait of Hormuz, still very much in play?
I think it's two parts. Number one, I do think that we will see values come off from these highs that we've set here in the last couple of days. We've already seen this to a certain extent with Brazil urea paper futures trading this morning. I think that we will see this in other parts of the world. I think we'll see this in the NOLA physical market. However, we also have to understand the fact that we've lost production. We have lost several weeks of production in Iran. We have lost several weeks of production in Egypt. This is on top of a lack of exports from places like China, production issues in Europe. So unfortunately, while yes, we think the price is going to come down from the highs, I also don't believe it's going to come down to the lows we had previously expected. The global S&D for urea is already so snug that any production lost, we don't have that excess capability to make up that difference throughout the rest of the year. So unfortunately, we are coming off the high, but we're having to raise the price floor.
I see. Well, really appreciate you joining us today, Josh. We'll be keeping a close eye on these developments. Everything changes so quickly lately. And thank you for watching. For more financial content like this, don't forget to like and subscribe to our channel.